Hello, guys. It's a pleasure to meet all of you. We're starting a webinar series together with our friends from Paybis. First, I'm gonna explain a bit what is gonna happen here. So we're gonna have a 45-minute webinar where we're gonna talk about how to build or how to get or implement an on-ramp in your Web3 project. The goal is to explain everything what on-ramp consists of, and by the end of the webinar, you have good understanding whether you build one or implement one. Let me first introduce myself. My name is Konstantin. I'm one of the co-founders of company Paybis. We're more than 11 years on the market. I'm currently in the role of Chief Business Development Officer and actually responsible for sale of our products, B2B products. And I'm always looking for the next big thing in crypto, new innovations, new breakthroughs, and so on. Together with me, we have Emeka, who's going to introduce himself as well.
Yeah, hi everyone. Super excited to be here. My name is Emeka. I am a senior product manager at Sumsub. I'm responsible for everything crypto, really. I haven't been in crypto for up to 12 years, but yeah, I've been in fintech for 5+ years, most notably at Binance and then at Revolut. And in my spare time, I read a lot. Yeah.
Cool. Let's continue. So what's on agenda? We have several chapters. So the presentation will be divided in several blocks. First of all, we're going to talk about the business needs and the use cases, like when a project, an on-ramp would want to build one, to build a ramp, right? When do you think you need this functionality and so on? Then we're going to talk about what an on-ramp really is, right? Because again, the goal of this webinar is to explain what is under the hood, and so you can make a decision later on if you want to integrate some of the providers on the market, like us, for example, or you want to build everything in-house and do it yourself. And then we'll have a few case studies where we're going to explain like what's happening in the industry, which companies are going which direction. A little bit about Paybis as a company. So we are 11 years in the market. We're more than 180 people already in the company. We have more than 5 million retail customers, more than 200 business customers, and this year was pretty good for us. We already have done more than 2 billion in the volumes, in trading volumes this year. So helping a lot of companies and individuals to get into crypto. Then I give a word to Emeka to introduce Sumsub for those who don't know.
Yeah, so for anybody who isn't aware of what Sumsub is, we are typically a verification platform, but we've evolved from that over the years to kind of cover the full customer lifecycle. So we do everything from user verification, which is KYC, to business verification, which is KYB, and then transaction monitoring, travel rule, and fraud prevention. We've been around for roughly 10 years thereabouts. We have like 4,000 plus clients, over 750 team members, and we are, have like 5 offices across the world. In terms of like our value to users and the way we can like position ourselves, when we've done this research with some pretty notable names in the industry, typical payback time for when you have a solution is typically like less than 6 months, depending on your business model, and you can get upwards of 240%, ROI. That's who we are, like in a nutshell. We do lots of stuff, but just gonna keep it high level. And as we go on, we will dive deeper and just see how we and Paybis work together. For context, Paybis and some of our partners, we work together on lots of different things. So yeah.
Cool, thank you. Yeah, we actually work with you guys for almost 10 years, I think, a bit less. Yeah, we were one of your first customers, and
Yep.
We have been working together for quite a long time. So what we're gonna do now, we're also gonna start a poll. So you can go to the poll section in this web application that we're using right now, and we are quite interested to understand what is your current situation, what is your current journey, right? If you're planning to implement an on-ramp in the short term, or you already have an on-ramp in your project and you have some questions and you want to kind of explore more, or you haven't even started yet and you're kind of looking forward to learn more about it. So while you will be answering, we will continue with our presentation. So when do you need an off-ramp, right? When a Web3 project, maybe even a Web2 project needs an on-ramp. Let's talk about several common triggers. So one of these triggers is, of course, the onboarding of Web2 users, right? Because our goal at Paybis from day one was to make it simple for Web2 people to get into crypto. In like modern terminology, like onboard Web2 people into Web3. So any company which is in the crypto space, there are so many like different, let's say, verticals. At some point, every Web3 company will need an on-ramp, because any Web3 company in the next 3 to 5 years will want to onboard Web2 people, because the current, let's say, number of people worldwide and the current crypto adoption is still at very early stage, right? We're still less than 10% of world population are into crypto. So there is a lot of potential. Why you would think you need an on-ramp, right? Because there is a clear business case where you have a core product where your main revenue is driven by an on-ramp feature, or it may be a supporting feature because you have another type of project, maybe a DeFi project, maybe a news or educational portal, and you have crypto user base, and you want to monetize those users, right? A good example would be some kind of news portal where people go and learn, read news about crypto. So you have a lot of crypto, let's say, oriented people who you can easily monetize. And how on-ramp can actually increase your revenue, it's of course getting more people onboarded to your platform as well, right? So you would increase a little bit the retention of the users, because they know that they can not only learn about crypto on your platform, but they can also get crypto on your platform, right? So they will not be looking somewhere else, because typical use case for Web3 projects which don't have an on-ramp yet, people come to them for a specific need, if it's staking, lending, or education, or some DeFi kind of interesting projects, but they would get crypto elsewhere, right? So you're leaving money on the table for other projects to take it. So using on-ramp, you can actually start monetizing it yourself. All right, some of the, maybe Emeka, you want to add something here as well from your side?
Yeah, I think, again, if you're a Web3 company, at some point it's inevitable that you will have to like onboard users. Obviously, depending on how you monetize, that would be pretty like important. So it's something to keep in mind. Obviously, I think we in crypto like to think that crypto is independent of everything else. I'm just gonna go build up stuff. But there is a world where the fiat and crypto, Web2 and Web3 collide, and a lot of times an on-ramp will be that first introduction or that bridge, so to speak.
All right. Some of the statistics, maybe a bit boring stuff, maybe not, but the interesting facts, right? That's what I also mentioned, that only roughly about 700 million people worldwide are into crypto. This is kind of the information that you can probably research yourself on internet, but this is what we have been able to find. And then if you talk about like financial numbers, so our kind of understanding and our best guess based on the information that we could gather is that about $4 billion was used basically the last 12 months to purchase Bitcoin by retail customers, and about $1 billion was used to purchase stablecoins and get into stablecoins. And of course, we are not talking about the rest of the crypto industry. So there is a lot of money going in. Of course, Bitcoin and stablecoins are the biggest ways for people to get into crypto. Let's say the biggest major tokens that people buy. Then the rest of the tokens, either people buy again on different ramps like ours and in different places, but mostly people then would swap from stablecoins to other projects or to other tokens and so on. Then also interesting fact that we see quite a big adoption in different countries, right? And it's not just developed countries, as you can see. So for example, almost 30% of UAE people are in crypto, but we know that, okay, there are a lot of expats there and a lot of business people. Then like 20% of people, even more than 20% in the USA are into crypto already, and developing countries and other markets are catching up. And what we also see and forecast that on yearly basis, we see that the number of people getting into crypto is growing by approximately 8 and 20%. So this is what we're going to foresee. This is what we foresee in the next couple of years, and especially due to the fact that regulations are becoming more adopted worldwide. People have more trust into crypto. More people want to get into it. So your projects that you're building will be or might become their first gateway into crypto, and you need to have a good, let's say, instrument, a good tool to get your customers into crypto as easy as possible. All right. Let's talk about the different use cases, right? What are the different use cases we see in Web3, which companies typically have on-ramps as part of their offering to the customers? A typical use case is centralized exchange. Kraken, Binance, Coinbase, right? All these exchanges, of course, make money primarily on trading. But in order for people to start trading, right, they need to either deposit crypto or fiat. And for the last 10 years, when centralized exchanges became, a mainstream thing, all of them had fiat rails as one of the primary instruments to onboard new people into exchange and get, let's say, people to deposit funds, and so the company can start generating revenue. So for them, for any centralized exchange, ramp is one of the key components for revenue generating features. Then we can focus on fiat to crypto exchanges. So it's more smaller projects out there which are focusing primarily on selling crypto to the people, not just trading like on centralized exchange, because centralized exchanges are more about the trading. But fiat to crypto exchanges, I would say, smaller players for whom converting fiat to crypto and crypto to fiat is the primary business. And of course, for them, the ramp component, the fiat rail component is the main thing to make their business competitive. And of course, these projects need to have a good thing in place. And then what we see, which quite developed during last 5 years, are crypto wallets, custodian, non-custodian, and we all know good examples like Phantom Wallet, MetaMask, Trust Wallet, all the big Web3 wallets out there. Of course, their main goal was to give people a chance to enter Web3 space and interact with the DeFi, and primarily it was swaps, lending, staking, all these things. But ramp became a thing maybe the last several years because it gives also the wallets opportunity to monetize their user base, because users, if they want to buy crypto, they want to find the wallet. So whenever they find the wallet they think is trustworthy, they start using it. And of course, a wallet needs to have a component which would help the new users to get their first crypto and maybe buy it and then sell it afterwards and get money to their bank account. So it's a supporting feature, but not the primary one, of course. And then what we also starting to see maybe in the last year only, maybe starting from last year, more and more Web3 projects, DeFi projects, who are like 100% DeFi, are starting to get ramps or interested in ramps, because again, they want to monetize their current users, because they have a lot of Web3 users who are, for example, connecting their non-custodial wallet, and they are buying crypto inside the wallet, right? So they see the users on their platforms who are actually buying crypto elsewhere, and they can now monetize these users and increase the retention of these users, because if you go to a swap protocol, I mean, you want to keep the customers at your project, right? Instead of the customers trying your project but then continuing doing swaps, let's say in the non-custodial wallet, because they can do it there as well and they don't need to come to your project. So it's an additional feature, a nice to have feature, but it's becoming a trending feature right now. And let me quickly show you how the on-ramp actually looks, so you have an understanding, for those people who haven't seen it yet, how the typical user experience work. when somebody's trying to buy something inside the wallet, inside the DeFi, or inside the centralized exchange. So it's a typical interface where customer would say, I want to spend $100, right? And the customer would see how much crypto he will get, how much Bitcoin or how much stablecoin and so on. And then what happens is they can also find other payment methods, not just credit cards as displayed here, but in order to cover more regions and more let's say different category of customers, of course you need to have a broad range of different payment methods, because in some developed markets like Europe, everybody's using Apple Pay. In some countries like maybe Latin America, Africa, Asia, people used to use more local payment methods, and they're not so much into Visa, MasterCard. So you need to have a broad range of payment methods to cover all your customers regionally. And then the interface is quite straightforward. Either customers specify their own wallet, or it's specified automatically through the integration. They would decide how they want to pay, enter card manually, use one they used before, or use Apple Google Pay. Then, for example, we have use cases where, of course, customer would have to go through KYC, and this is where we use Sumsub quite a lot. So it's, again, typical interface from Sumsub, where you would specify if you're from US or not. You would provide basic information about your country. You would make a picture of your documents, scan your passport or ID card, make a selfie. We would get it accepted in most use cases, and we will talk more about KYC approval rates. But after KYC is approved, you get your crypto straightforward into your wallet. So this is a little bit. The next slide, we're going to talk about like what on-ramp consists of, right? Because you just saw a very simple user interface where just customer starts with a simple journey, clicks few buttons, enter his card details, is doing KYC, and he gets crypto into wallet. And this is just the tip of the iceberg, right? Under the hood, it's like in the car. You sit in the car, especially now with electric cars. You sit, you have a wheel, you have a monitor, you just drive. You don't realize what is happening under hood, what is the technology behind, and this is what we're going to talk about more today. So let me just give you like a brief explanation what you as a company need to think about when you want to build such features yourself. So let's start with the most obvious thing, with payments, right? You would need to basically establish a relationship with all the payment providers, either payment providers directly or go through PSPs that would can act as a bridge between you and acquirers and payment providers. But then if you go through PSP, it will be a bit more expensive because they are in the middle. If you go directly to all the payment providers, then you might get the best price, but then you need to negotiate, make contracts, pass QIB with every provider, basically establish the relationship, integrate all of them, and so on. Same probably MICA can talk about compliance, right? Because you can choose how you want to deal with compliance. And yeah, MICA can probably talk a bit more about that.
Yeah. Thanks, Konstantin. Very nice interface that you've shown so far. Obviously, like some of us are behind the scenes doing the work, but if you're going to use an on-ramp or you're going to build an on-ramp, because there's money or financial stuff involved, it's very important that you do like KYC or KYB, depending on who your client is. If you're onboarding individuals or you're onboarding companies, for example. But again, also depends on the regions that you're looking at. So if you're going to be onboarding, individuals in multiple jurisdictions, multiple countries, each of these have their own different, KYC requirements, documents to be used, and so on and so forth. So that's a bit of like what goes under the hood, and what like anyone who has an on-ramp or is thinking of building an on-ramp should be cognizant of. There's also the long tail of that, where because these are transactions, you kind of have to monitor them over the life cycle. So for example, understanding that funds are coming from non-risky sources or non-risky countries, or not crime affiliated jurisdictions or entities, so to speak. All of that again is happening under the hood when you think of, again, moving money from point A, which is your user's wallet or your user's bank account, to point B, which is the platform where those funds are supposed to be used and sorted. And then also, I guess with cards as well, if you think of fraud and chargebacks, those are also things that you have to be cognizant of. Those will happen, by the way. But what an on-ramp will help you do, again, is to prevent rather than just solving the cashbacks when they come. So to a large extent, predict, based on user behavior or based on XYZ data points, is this a likely fraudulent transaction? And how do you effect that? Or is this a chargeback, and how do you dispute that with data with XYZ providers? You want to keep your acquirers happy, so you have like a good score with them. So having all these things in place are super, super important. And again, under the hood, that's a bit of where Sumsub comes in and works with, for example, Paybis, and so on and so forth. For the next point, I'll let Konstantin take over, and treasury and so on and so forth. Yeah.
Yeah, thanks, Emeka. But maybe I would just summarize that at some point you would need to think about compliance, right? And all the tools you need to use depending on your jurisdiction, right? And you will have to, go to some company like Sumsub and find out, okay, what they can do for you, how to integrate all of that stuff, build the team internally, and so on and so on. So it's quite a lot of job, but we're going to talk a bit more about it later. Then, of course, you need to think about payments again, like how to deal with fraud. There is friendly fraud, there are scammers, there are carders, and so on. How to deal with chargebacks. Then, of course, since you have payments, you have to think about foreign exchange rates, treasury, how you manage your capital flow, how you manage your funds. Then you would start thinking about, okay, where to get crypto liquidity from, right? If the customer is buying crypto, you obviously want to kind of get these cryptos from somewhere. So you need to integrate either to centralized exchanges or to some liquidity providers. Then, for example, next thing that you will have to take care are like settlements, reconciliations, technical supports, and so on. So imagine you have 20 different payment providers integrated. Each one of them would be sending funds to you that they receive from your customers. You need to make sure that all these transfers are correct. Nobody forgot about any payments. All the fees that they charge you are correct, and so on and so on. There might be technical issues. Some payment channels might not be working, and so on. So there are a lot of things to kind of consider. And then like last but not least, customer support. You would have, you would need to think about the customer support, because your customers will always have issues with payments, with KYC, with maybe with even chargebacks if they come to you and they would forget that they actually made the payment, which is like which is what we call a friendly fraud, right? You made the purchase and then 1 month later you forgot about it. You're looking at your bank statement like, what is Paybis? I never paid to Paybis, right? And then they find you and come to you and then realize, okay, actually they did some transaction. So you need to have some customer support facing your customers, ideally 24/7 if you want to provide a good service. So there are a lot of things, and we are not even touching like the IT part, right? The technical implementation, the support of the technical implementation, infrastructure. Obviously, we're under assumption that if you're building some product yourself, you have already the IT department, which is building your main product, and other teams, but this is kind of additional things that you will have to build in if you want to consider, selling crypto to your customers. Let's go to the next slide. So here, for example, we would see, we would encourage you to monitor the key metrics, right? The key metrics are like authorization rates for your payment providers, because it's not enough just to connect some PSP or card acquirer, right? Every acquirer would have different approval rates in different jurisdictions and in different countries. So it means that you have to monitor that, right? Because your customers will not be happy if every second transaction doesn't work. Then the next thing is that whenever you would require customers to go through KYC, you will need to ensure that your KYC provider also is doing a good job, right? We, for example, are using Sumsub for one of the reasons, right? Because we like how KYC is done, that it's quick, it's efficient, it kind of works quite fast, and the kind of KYC approval rates are also good enough, right? Because you always can have false positives. And we have tried other providers in the past, and we understood that. And especially the important stuff here is to think about the fraud. And maybe Emeka, you can talk a little bit more, because KYC provider like you are also helping to fight fraud, because there are a lot of, especially now with AI, a lot of fake documents that can be used to scam people.
Yeah. So just to throw a stat out there, 95 to 96% of fraud typically happens after the onboarding. So you might onboard your customer today, and fantastic documents, you've confirmed it's a real life person. However, sometime in the future, stuff may change. Accounts might get taken over, might get hacked, might get sold, whatever. You as a company who's dealing with crypto, you need to be able to be on top of that. So aside just completion rates and showing that the funds are being completed, it's important to also look at like the long tail. Again, that's where like Sumsub comes on board, and you can kind of like track these users from inception up until their transaction history and their life cycle with you. But that's like super important. In terms of, I mean, at Sumsub we see like so many different types of fraud. Deepfakes, injections, just fake stuff. And we're always working to just again stop these at the board. But again, important to note as a company coming in is that working with a partner kind of like operationalizes it for you. So your compliance officers aren't necessarily thinking about these things. You're just getting feedback, stopping the bad guys, and focusing on your core business, serving your users. Yeah.
Yeah, and maybe again, the last point that is important is to kind of the actual conversion, right? Time to first purchase, converting the intent of the customer to actual payment. And this is what like we have been focusing for 11 years, trying to build the best possible, we call it like sales funnel for the customer, right? So if you're building a product yourself, DeFi or whatever you're building, it's important to make sure that it's easy for customers to use. And when you will be considering building your own UI UX or using us as alternative, you always have to think about like how to convert the intent of the customer to the purchase. Because if you create a very, very long process with many steps, people will drop off at first step. And what we're trying to do, we're trying to help our clients to build kind of the process which requires the least number of steps to get to the actual crypto. Because the less steps you have, the better conversion rate there is. Okay, let's continue. Next one. Here we're going to talk about the decision framework. Like what do you need to take into consideration, right, when you are deciding if you want to kind of build something yourself or get a ready solution from the market. This is a little bit of what we talked before, but just to summarize. So of course you want to think about time to market, and we're going to explore all these points in the next slides. You want to think about time to market. You want to think about total cost of ownership, about the licenses and regulations, about the fraud, about approvals and conversion rates, about UI, UX, and then the additional two things, right, that we haven't touched yet, about the data control and security, and eventually about your own company roadmap and your capacity of doing such things. Like there is a classical joke that before starting any project, you need to make sure that you have enough resources, because so many projects fail because somewhere in the middle of the project they realize that, well, they don't have enough capacity. So basically, we will gonna dive deeper into these points. Okay, time to market. So here we're gonna talk with Emeka about like obvious things, and I'm gonna talk about maybe the building part first. For example, if you would want to build a typical project, a typical on-ramp feature yourself, maybe with some, I don't know, at least starting with 5 payment methods, top cryptocurrencies you want to support. Based on our kind of internal expertise, we would estimate that this project would require at least or roughly 10 people and 6 months of time to build. And I'm not talking that 10 people will be just developers to build. It's the whole team. It's product. Somebody will be acting as a product manager. Somebody will be acting as a technical expert. Some people will act as developers. But then you also have to have like legal people, compliance people, financial people, right? So it could be a small team inside your organization, or if it's a startup and you're building everything from scratch, but it will take you at least 6 months to get everything in place, right? Sign the contracts, get your license. I mean, licenses these days it might take even longer to get. Okay, you might buy a ready a company with a license already, right? To save some time on that, but still you need to build the software yourself. There are also a lot of ready-made software out there which might save a little bit of time to market, but it will still cost you more or less the same. And we also estimate that depending on where your resources are and where your team is located, it could have a different cost factor, right? So from $500,000 to $300,000, depending on the location of your people, of course, cost of labor. And then maybe Emeka, you can talk a bit more about like consideration of if you want to buy a ready-made solution.
Yeah, I think one thing that hasn't been mentioned is obviously like I'm a product manager, so I build stuff for a living. When you even think of like building, a lot of times you build like an iteration. So you build like the MVP, you build like a beta, and so on and so forth. So even that 6 months estimate that's on the screen, it's pretty much 6 months to your basic version, and then maybe like a year, couple of years till your fully fledged version, like across like different jurisdictions and multiple payment methods and so on and so forth. Whereas when you're buying a solution, it's like someone has already done the hard work of all the heavy lifting, all the relationships with like providers and so on and so forth. So you're just kind of like plugging and playing. Timelines to implement will typically depend. Obviously, a lot shorter than 6 months, but again, and with a lot fewer people than when you're buying a ready solution. So you can typically kind of like go live with maybe 3 or 4 people max: the engineers, the product manager, and someone from like an operations perspective who is, I guess, like mapping out what happens next and so on and so forth. The biggest advantage to buying stuff is you can go deeper and wider, like a lot faster. So you can think of it like, let's say you want to launch in 5, 6, 7 markets at the same time, or you want to launch in these markets like week after week. That is possible when you buy a solution. When you're building, typically not so much, because like you have to test, you have to iterate, you have to go live with like small batches, and so on and so forth. Obviously, again, key decision making here is if you have to get to market fast, maybe you're not waiting for a license, there's an opportunity you want to kind of take hold of at the moment, then buying is something much more favorable for you, and a lot, again, very much cheaper than building.
All right, let's continue. Yeah, we touched a little bit on kind of ownership cost and break even, but here, I mean, we talked about implementation costs on the previous slide. Here, we also need to consider the maintenance cost, right? Because if you build something, it's just the beginning of the journey. You will never stop continue building. You will have always changes to your existing product, improvements, additional features. You will start getting audits. So you need to be ready and consider the operating cost. So basically, previous slide was more about CapEx. This is about OpEx, right? And then especially if you want to go into getting licenses yourself, it will be quite expensive. So our internal guesstimates, again, this is our internal subjective opinion, that it makes sense for a company to build the ramping rails, the fiat rails themselves, only when they start doing at least 30 million in the kind of monthly volumes, or they expect to get to that range with kind of significant margin. That it makes sense to basically invest time in developing and, of course, then running the solution going forward.
Yeah. Just to add on that as well, because when we think of, again, like OpEx versus CapEx, the way I see this is more like the cost to running a team. Sometimes the cost of maybe one person on the team might be equal to the cost of, let's say, paying a provider, for example, in a year even. So again, all this will depend on how big you are, what your volumes are, and so on and so forth. But it's important to kind of like put that cost in perspective in terms of like heads in a team, if that makes sense. So on one hand, you're paying for a team in your external provider indirectly at a much cheaper price, and then on the other hand, you're paying for like a whole team where you're responsible for everything from A to Z. Yeah, just to cut you in, Konstantin.
All right, let's continue to the next slide. Here we will basically can touch a little bit about the regulations and the licensing burden. So if you basically want to do things yourself, then you have to go all in into regulation. Get yourself a license. Be ready to be audited every year. You will need to hire compliance people like chief money laundering officer, right, and so on. So then, for example, you would have to adopt to every market and their regulation, because we have different regulation in Europe, comparing to US, comparing to Asia. They are in the way similar, but there are small differences, right? And for example, if you would use somebody like Sumsub, they will help you to figure out, okay, what kind of regulations are required in every jurisdiction. But I would say maybe they will not be able to consult you, right? But they will be able to provide you with tools to adapt for different jurisdictions. And then you have to, for example, like we are doing, right? For UK, we have one configuration with Sumsub. For US, we have another configuration. For Europe, we have a third configuration, right? But you need to have people inside who will understand regulatory framework in every country and how to use your internal tools to adapt to this regulation. And then again, transaction monitoring, right? You have different thresholds for transaction monitoring in different countries. In some countries, maybe, for example, in our case, in some countries, we can allow no KYC purchases for customers to get their first crypto up to $1,000 per person. In other countries, we would allow only up to $500 per person. There are some exceptions where we would require KYC from from the first dollar, right? So, and you need to kind of know what to do and how to do it, because if you don't, then we all know what happens. The biggest case last year was with Binance, which were fined, like I think the biggest amount in crypto in Web3 history in US, because they didn't follow their AML regulations, and we all know that they even had to. CZ was even forced to get out of his official chief executive officer position, right? Because these guys just thought that maybe regulations are something they can do later. But we all know how big projects grow, right? They first start penetrating the market, then they start thinking about the regulations. These days, with the regulations, I think in order to build something amazing and something great, you need to have regulation as cornerstone in your project. And look, for example, good example is Tether and Circle. Tether have been building stablecoin for many years, and now they're only adopting to regulations. Circle, they started from day one, and the position was that they will have a regulated stablecoin. That's why they are growing so much. That's why a lot of companies are now migrating from USDT to USDC, specifically for that reason. So if you want to build something, long term, you need to think about that quite a lot. Anything you want to add, Emeka, here?
Yeah, I think just 2 cents on that. Like obviously, like as a VASP or as a crypto company, you are ultimately responsible for your regulation. You're ultimately responsible for your compliance. So there is no 100% like outsourcing that. You have to, when push comes to shove, it's your neck on the chopping block. However, working with partners who have, I guess, deeper domain knowledge, who are like constantly talking to regulators like we are at Sumsub, and who can, I guess, like advise you or like recommend stuff for you. It's like super, super important. And again, this helps with, most especially this helps with keeping your license, importantly, but it also helps with like growth and like expanding into like other markets. Like I don't think there's any company today who doesn't have the potential to be like a global company. So in thinking of your growth, it's important to think of the regulatory licensing stuff as like a key partner there, as opposed to just this cost center that you just outsource and forget about, so to speak. But yeah, that's my 2 cents. Interesting times, because regulations are always changing and you have to be on top of stuff, but we will see how it goes as things improve in crypto.
Yeah, that's true. Then the next thing, of course, that you need to kind of consider is fraud in payments. And this is what is a pain for everybody, right? It's a pain for every company who is doing with payments, regardless if it's crypto, if it's like traditional payments and finance. And this is where you will have to kind of invest a lot of your time and energy to build the anti-fraud framework in your project, because like people can pay you, let's say, make a deposit of $100, you will give them, let's say, $100 worth of crypto minus your commissions and so on. But if they do a chargeback and you lose it, then you lose $100, right? But maybe on this $100 transaction, your revenue or your margin was 1%, because on-ramp is a very low marginal business. So basically, then you have a risk ratio like of 1 to 100, typically, and you have to manage that. right? Because if you fail with fraud, you will lose with fraud management, you will lose a relationship with your payment providers. And for example, Visa, MasterCard would expect you to have your fraud thresholds below 1%, ideally at 0.5, not more. Then, for example, banking partners will not tolerate if there is a recall rate more than 0.2%. If you would offer your customers a deposit through, let's say, bank transfers, it's like SEPA or ACH. And then, of course, there is always a friendly fraud, which I mentioned, right? That sometimes people would buy crypto, maybe they would invest in some meme coin, they would lose money, and then they will pretend like that was not me, somebody stole my card, and pretend that it was not them and go to their bank and try to open the chargeback, right? You need to be able to learn how to protect yourself from such cases, how to fight such cases, how to dispute such cases, and so on. So this is where also you would have to pick a solution on the market. I mean, if you integrate an on-ramp provider like, for example, us or somebody else, then you don't care because everything is taken care of by us. For example, if we would provide you our on-ramp product, you don't have to think about chargebacks because we would take it on our shoulders. You don't have to think about that. If you will decide to build something, then you would go to guys like Sumsub because they will help a lot. And maybe Emeka, you can tell a bit more, like how do you guys help companies like us and others to fight fraud?
Yeah. So I guess just being a bit technical, because when we think about fraud, what we're doing on our side is basically we're combining lots of different data points, and we're looking at lots of different scenarios, and then we're seeing what is typical and what is like atypical. These are data points, and this can range from multiple things. This can range from data points across like the user, who the user is, like what country they are in, how old they are, up until like what devices are they using to interact, and what has that device been like historically. So you can think of like IP addresses, device intelligence, and then like behavior, like what is this customer's behavior over time? Like, is this someone who has been transacting, let's say 1K a month, and then all of a sudden in month X, he's transacted like 10 to 15K or 10 to 15 times that amount. And lots of other different indicators as well based on like our network. These, again, our goal is to be like preventive, but even if stuff happens, regulators expect that you are able to stop stuff and report things. So make FIU reports, whatever. And that's a bit of like, again, the value that we add in terms of, we're going to try to track this user across their life cycle, have a risk score for them, flag them when they become slightly suspicious. But peradventure, anything slips through the crack, or like there's things that your compliance officers are like super against, then you have an opportunity to report this guy to the regulator and be like, hey, XYZ happened, and so on and so forth. That is always like super appreciated, and it's almost like mandatory in a regulated space, which crypto is increasingly becoming. Yeah.
All right. Let's continue. The next thing that would be very critical for you is the approval and conversion rate, the one we mentioned. For example, especially it is especially important for card payments because, as we all know, not all banks around the world are still crypto friendly. And I mean it in the way that whenever we make payments online to all the merchants, there is a so-called merchant code that Visa and MasterCard are issuing, and acquirers are issuing, and every merchant is categorized. Either it's like online shop for clothes, or digital arts, or anything, or digital goods. So all the merchants are categorized, like hotels, airlines, and everything. And then crypto exchanges like us, right? We have also special category like crypto exchange, for example, just to make it simple for you to understand. And then whenever, let's say you're making payment online, your bank would see where you are spending your money, right? Who you're paying, what is the merchant? They will of course know the name of the company. But what they really are looking is the merchant category. Like, is it airline? And and we all know that sometimes when we pay for hotels or airlines, we're not even asked for 3DS. So we're not even asked in our, let's say, if you use Revolut, right? You don't even have a confirmation in Revolut to confirm the payment because Revolut knows that this is a trusted provider. With crypto, it's not the case, right? Because every, I mean, we all know that crypto is still on the high risk sector for banks, and there is still a lot of fraud related to crypto. So all the banks are cautious, and some banks will be okay with such transactions because again, crypto becomes more regulated. People invest more, and they understand that it's now normal these days when people buy something and make payments to crypto exchanges. But some banks still don't allow it, right? And the trick is here, for example, in the United States, let's take Bank of America. If you have a debit card of Bank of America, you can buy crypto anywhere. If you have a credit card, you can't, because the bank simply does not allow you to make a payment with a credit card to the bank, to crypto exchange. And then there are also tricks like domestic acquiring, European acquiring, and or regional acquiring, right? And approval rates and success rates, like the ratio when the banks really confirm the payment, is different regional wise, because companies, let's say banks in the United States, would maybe more likely to approve a transaction to United States merchant. Company in Europe most likely will, let's say bank in Europe will approve your transaction to European merchant. Company in Asia, bank in Asia, the same. If you have an Asian card and you're making a purchase somewhere in US, your bank might think this is a suspicious transaction, right? They might not even reject this as a crypto purchase. They might even think you're being scammed, because it's not a typical case for you to buy something from United States if you have an Asian card. So it's very important to have these things in place to control your approval rates, look for more payment providers. For example, we on our side have integrated 6 different acquirers. We put them into cascading to make sure that whenever you're trying to make a payment, we pick the right payment provider. And if for example, your card doesn't work for some reason, we would offer you a local payment provider that fits your local needs. For example, if you're in Asia, we will give you an option to pay with local payment provider. Okay, we're running short on time, so let's speed up a little bit. We talked also about UI UX, but I guess everything is quite pretty straightforward, right? So regardless if you're building things yourself or you're using a third-party on-ramp provider like us, you want to make sure that your users would get to, let's say, end result as quickly as possible. That's why, for example, we have developed a feature called one-click Apple Pay, Google Pay checkout. It's very similar to like buying, let's say, shoes online. I recently had my own experience, like I was buying some shoes online with Apple Pay. So I picked something, added to the cart, clicked instant checkout with Apple Pay without even registering on the website. They got all the information, like all my payment details, all my shipping details from Apple Pay, and just told me, yeah, we send the order. This is the address. So we implemented the same feature for in our on-ramp for buying crypto, where you can say, okay, I want to buy my first Bitcoin, like $100 worth of Bitcoin with Apple Pay. We will get everything from Apple, your first name, last name, email. We will create an account for you automatically. We will get your billing address so we can do the basic due diligence and comply with regulations. And then if your card works, you have enough money, your bank is not suspicious about us, we will just charge the cards and send you crypto right away. So as simple as that. And this is something that you need to consider, because not all the providers out there do the same thing as we do, right? Because we are really focused on nice UI UX, because it's leads to conversion, to better conversion. And if you're building things yourself, I strongly encourage you also to think about users and make it as simple as possible for your customers. And then one of the last things we want to talk about is like data control and security, because I guess this is a question that me, us, and Emeka is asked a lot. Like, what happens if, let's say, we take your solution? What happens with our customer data, right? Because you will be processing our customer data. Are you compliant with GDPR? How safe are you keeping our customer data? Because if you guys fail and you have a security leak on something, then our users will be affected. And what I can always say that you have to look at the company that you decided to go with, make sure that they are kind of compliant, regulated, that have good reputation, because you will be kind of giving your user data to other companies, despite the fact that we all have our security measures in place. But it's still something for you to decide, because if you want to do it yourself, then you need to have all the security measures yourself. If you want to kind of integrate somebody like us or Sumsub, then you have to make sure at least that the integration is safe, because companies like us would care about our reputation and would make sure that we keep our customers' data safe. And
Yeah.
okay, want to add something?
Yeah, definitely. I think because of the fact that we're like a KYC provider, like personal data, keeping that secure, keeping that safe is kind of like very, very important. Like everyone asks about that, like, how is data, processed? How is it encrypted, and so on and so forth. We have a full page where we talk about like all our licenses and all the different certifications that we do almost like year on year to keep data safe. But obviously, like the biggest question to ask yourself if you're thinking of making a decision, just as Konstantin has said, is if I'm doing this myself, am I able to properly set in place the things that I need to keep this user's data safe, secure, partitioned, encrypted, and so on and so forth. Depending on your jurisdiction as well, you also have to ask yourself things like, do I need like local storage, and so on and so forth. So there's lots of data is very, very important, like in this day and age, even with like AI and stuff. Again, if you're doing this internally, you have to ask yourself, do I have what it takes to ensure that this data is not, used to train models, and so on and so forth. Whereas when you're buying a solution, you are typically, I guess, validating that provider to ensure that first of all, they have certifications in place. Your data is yours, so to speak, and that can be requested, exported, whatever. And then obviously within your user base or within your employees and whoever has a platform, like those roles are properly like defined. These all kind of like add the building blocks to keeping data secure and compliant to like GDPR and data minimization, and so on and so forth. Ultimately, again, you need to ask, is this data like important to my business? Like, is this data important to, for example, as a business, you don't need card information, like that's not really relevant to you. But you might need things like, emails and locations. So ultimately you need to decide and then move ahead with that, like use that data decision points to determine how you handle data control. On your own, independently, you should have things in place that just keep your stuff safe, encryptions, um, and different like railguards and firewalls and all whatnot. But when you're speaking of like financial data, card data, user data, it's a whole different ballgame. You need like a DPO, and you need to just ensure that, I guess, end to end, everything is covered by your provider. Or if you're building it yourself, you understand what it takes and you can do that yourself.
Cool. We have a few more slides left, and then we need to close this down. So, a little bit of case study, like which typical companies are there which are using, let's say, in-house solutions and which are using somebody like us. I will just give you a quick example. Like companies, big exchanges like Binance, OKX, Bybit, Coinbase, what they did in the beginning, they all were using external providers like us when they have grown up and gained momentum, and they've kind of accumulated a lot of resources, and they were able to afford building things in-house. Then they decided, okay, now we're going to build things, all the on-ramp capabilities in-house, and stop using third-party providers. Smaller players on the market like CoinMama, Switchery, and many other players who are primarily focusing also on crypto to fiat exchange, they had a different story. They first decided to build everything in-house. They built it, they launched it, they operated for several years, and then they realized that, especially with the more strict regulation, it becomes too expensive to continue running everything in-house, and they migrated fully to third-party providers like us in this case. So it's the opposite use case, right? When people had in-house and they migrated. And then the third typical example are other DeFi Web3 projects like Phantom Wallet, MetaMask, Trust Wallet, and so on. From day one, when they decided to go with on-ramps, they integrated third-party providers, and they're still doing this because it's not their primary business, the on-ramp. It's a kind of supporting feature. And they don't have the expertise. They don't even want to get into all these compliance and regulations because they are just a technology provider, right? They provide non-custodial crypto wallet. In some cases, it's even open source, and that's it, right? They will never go into such things. All right, maybe a few last slides before we finish. Like criteria when you need to decide, which you need to take into account. We can just summarize it again. So what role of the fiat rail ramp is in your project? Is it a primary? Is it like mainly revenue generating, or if it's a supporting role? how quickly do you need it? Like, what is your time to market expectations? Then, of course, you need to figure out the budget. Like, integrating a third-party solution is much, much cheaper than building everything in-house. And of course, you need to understand like what is the capex opex ratio, right? Because you can build even if you're a Web3 developer and you have a small team building something in Web3, you can just integrate an on-ramp solution, experiment with it, and you can still keep your team on the same size. You don't have any opex cost at all. And then Emeka, you can maybe also wrap up the last slide here.
Yeah. So when to build, actually, like what do you need to take into consideration? I think the first thing to understand is like if your business model, or if at some point you want your business model or you want to make revenue from being a ramp, then it's important that you build stuff. If you're mature enough, not just in terms of size, but also in terms of like the team, especially, you have a compliance team, you have like the legal side, and you have all these things in place, then again, it makes sense to build. If you want to be in control of your data points, like end to end, for whatever reason, it also makes sense to build as well. Building is expensive, so you need to be operating at a particular, I guess, level. I do think the natural trajectory is, you start off with like a ramp, and then as you grow and you grow, and then maybe you can kind of like think of doing your own thing in terms of like building stuff. But then also, again, key things, again, just summarize, like just giving like one-liners. We can spend time on each of these very quickly. But again, important to ensure that if you're building or if you're trying to decide like when to build, a lot of the typical big players build because lots of different reasons, but like strategically it might make sense. But then also they might need to build stuff so it's like very interoperable with like their existing solutions or their existing technologies or their existing fraud or risk models or LLMs and all whatnot. So in those, I guess, cases, it's important to build. If you also have time, let's say you're expecting like a license in a year, very strategic, it might make sense to build as well. But the goal is, I guess, when you're building, we've kind of outlined the things you should look out for, like in partners, internally, but also things you should look out for from your point of view, like from your roadmap, from your strategy, and what you want to achieve in the long term, and so on and so forth. High level, that's pretty much it. And yeah, looking forward to hearing from you guys.
Cool. Thank you very much, Emeka. So guys, if you want to reach out and talk to us more, we have two ways of doing this. You can scan a QR code or go to paybis.com /business/on-off-ramp and basically fill in the form, and you will get in touch with our sales. So basically make an inquiry, what you want to talk about, what kind of project you have in mind, and our sales people will get back to you and talk to you. And the same goes with Sumsub. You can write an email, and the responsible team from Sumsub will get back to you and help you to kind of make a right decision. So I think we're out of time. I saw a lot of questions in the question section. I think we answered all of them in chat as well. So I assume, guys, if you don't have any additional questions, then we can wrap it up. Okay, Emeka, thank you very much for joining me on this first webinar series. Looking forward to have more sessions with you.
Definitely. It's been my pleasure. Thanks for inviting us.
Cool. Thank you, guys. Have a good day.
All right. Cheers.